Welcome to the Full of Tracy Money Audio Commentary. This is Owen Tracy recording. It is 3:58 p.m. That is Central Time. Today is March 21st, and today being Friday, it's the big picture, long-term audio and video for the various different asset classes. I thought I would kick off with gold. The trend has been remarkably consistent over the last 12 months, or let's call it 15 months. And for gold to rally 50% in the space of 15 months is quite spectacular. It tells us that there's a lot going on in the world that is not adequately discounted in other asset classes, and therefore money funnels into gold. And that probably is the best commentary there is, that something is untoward in the wider global economy. So on the one hand, you have the largest war in Europe that has been going on for the last several years. Then there's the response to that, which has been to fight Russia using Ukraine to supply the Ukrainian army with as much armaments as Europe and the USA, I guess more NATO, could supply without endangering their own personal defense. Then on top of that, there's the tariff war that has erupted over the last 7 or 8 weeks, and then the questions around that. There's the jump in yields in 2023 and 4, and subsequently the contraction in yields. Then when we think about the dollar, it has been both strong and weak over the course of the last year, and beginning to steady a little in here this week. There's the very real possibility that we're coming to an important peak in the AI sector, with an enormous amount of cash that has been devoted to this already, and a clear dependence on additional new rounds of even more cash needed to sustain it. So when we think about why gold has gone up, well, there's the fact that most of the buying so far has been from central banks. People are buying physical gold, and they're not really participating via ETFs just yet. So that is creating something of a shortage. Then there is the entire positioning around the whole question of tariffs, and whether gold in the USA or coming into the USA will be subject to tariffs, and that has represented this massive migration of physical gold out of the UK, particularly via Switzerland, to be recast into COMEX deliverable bars and then into COMEX warehouses. And that has been just a phenomenal amount of gold relative to the physical supply, but not all that much relative to the value of the gold market overall. But what it has clearly signaled to the market is that there's a clear demand for physical gold. People want to have gold they can hold in their hands. They're not particularly interested in ETFs right now. And there's the additional point that at the time when there was a big demand for ETFs and gold as an investment, as a hedge, is usually when other assets are not doing well. But we're only about a month off the peak in the S&P 500. So we've had one of the strongest trends in a long time on Wall Street for the last several years, and that has outcompeted gold.